Let's be honest, this year wasn't nearly as insane as last year in the realms of finance and economics. Sure, the year had its moments, but we just didn't have that same foreboding and unrelenting sense that civilization was about to collapse every 5 minutes. This year was more like every 5 weeks. But although it wasn't unique to 2012, we did notice that a lot of the year's biggest stories were either widely misunderstood or widely misinterpreted. And so, because that's exactly the kind of thing that gets those of us on Alphaville riled up, the year's most misunderstood stories is also the admittedly somewhat grumpy theme for this year's Christmas video. We hope you like it. Merry Christmas, Happy New Year, and here it is.
It's one of the most important cogs in the global financial machine.
Arrests, resignations, costly settlements, and damage.
LIBOR. Evidently that's a thing for a lot of people, but do you know who it wasn't such a big deal for? Anyone who worked at a bank, like ever. There's a simple reason why no one talked about LIBOR rates being artificially low, and that's, well, we just didn't think that you were that interested. Anyone with a Bloomberg terminal in 2008 could see the submitted rates, and yeah, banks couldn't fund there. Deals were getting pulled all over the place because balance sheet was so expensive.
My Christmas wish and moan for 2013 is that this year people stop taking the statements that follow Marathon Eurozone summits so very, very seriously. There was enough of that in 2012, to be perfectly honest. These statements are the product of just exhausted, zombified minds, and all they're really meant to do is allow Eurozone politicians to head home with heads held high and a little bit of a fudge in their hands.
America faces a very serious problem.
We can probably solve this in about a week. It's not that tough.
So it's easy to see why the fiscal cliff name is stuck. It's visually intuitive, it's easy to understand. Unfortunately, it's also a terrible metaphor for describing the problem, and it's led to a lot of inane references. So I never knew if we were on a bus high up in the mountains somewhere about to drive over the cliff, or if we were already in the valley below about to crash into it. And meanwhile, you've got the heroes on television telling us all that we need to rise above the cliff, which is like setting a new standard in vacuous phrasing. I don't know what it means. I think it means that as you approach the cliff, you should get in a hot air balloon or something and just kind of gently drift away. All I know is that we've arrived at the end of the year with a profound weariness and an impatience for a deal to be struck, and not just to avoid trivial things like, you know, high unemployment and human suffering and the like, but also so that we just don't have to talk about it anymore.
There's a US-based publication that I want to say this to. Just because a municipality enters into an interest rate swap doesn't necessarily mean the municipality, the interest rate swap, or their banks are somehow evil. They could really just be hedging their floating rate debt.
Yeah, I was wondering if anyone actually even remembers that Greece restructured its debt. Like back in March, it kind of blew away like 100 billion euros of debt, which is pretty big news. But everyone seems to want to like forget it, so including Greece itself. And everyone in the market seems to agree that this should never have happened, that it was a bad idea and they don't want it to happen elsewhere. So yeah, no PSI in Italy, no PSI in Spain, which for a debt crisis is kind of weird because we seem to have decided, yeah, we're going to pay all of this debt back in full. I find that kind of amazing, ridiculous, and pretty cowardly all at once.
Raising this concern, I am by no means recommending delay or inaction in addressing the nation's long-term fiscal challenges.
It's not that the QE part of monetary policy is unimportant. Of course it's important, but the really interesting developments this year have all been in the messaging side, so in trying to guide expectations of future policy. But you still have some corners of the financial markets that are worried that the Fed is priming the economy for a rampant inflation problem, which I think is ludicrous. And speaking of which,
another problem we had this year was with the idea that QE is money printing. I'm going to use Lisa to explain. Lisa, would you like some money I previously printed? Lisa's better off because she has something she didn't have before. That was money printing. This is QE. Here's some money I printed earlier, but I'm going to take this from you. Lisa's no better off and no worse off because Paul the Penguin is here with me. She can always repurchase it, but she doesn't have to. And that's why QE is an asset swap, not money printing. And the problem we have with Target 2 is not that it's self-financing by the Germans of Greece, it's that it messes up the transmission mechanism.
So there's a US-based publication that I want to say this to. David, I'm not going to talk about the London whale. There's a US-based publication that I want to say this to. David, we're not going to talk about Taleb. You know what happens when we talk about Taleb.
We need to remember all these statements is the last barrier between them and a good night's sleep.